We're joined by Andrew Cainey. You're Managing Director with Booz & Company in Greater China. You're based in Shanghai. You were talking about business models for the countryside. Now, when multinationals go into China, they're usually looking at tier one cities, because that's the easy option.
Absolutely.
You go in there, you've got a mass market, you don't have to think about the huge distances within China. Why then the countryside and the tier 3 cities?
I think there are a couple of reasons. There is so much growth beyond the tier 1 cities. Those multinationals that started in tier 1, tier 2 cities see the need and the opportunity to move down and meet the rest of the demand in China, which is growing so rapidly. The second important element of this is really the policy context, the need that China has to make sure that the countryside and the lower tier cities fully participate in the benefits of growth, and therefore the government support and openness to encouraging multinationals to enter those markets too.
So when you say government encouragement, does that involve financial incentives for companies to head in there?
In some sectors, such as the banking sector, there are particularly favorable regulations for foreign companies that want to set up in so-called rural areas. And these rural areas may in fact have cities of 500,000 or 1 million people in them. Secondly, as a response to the global crisis, there have been financial support and incentives both to Chinese companies seeking to expand and drive consumption in rural areas, and also at the local government level to encourage multinational enterprises to set up in places they may not otherwise choose.
In the past, though, or up to now, we've seen mainly Chinese companies taking this approach, that while the multinationals have gone for the tier 1 cities, the local companies have gone for the smaller cities.
Absolutely.
And tried to build up from there.
Absolutely.
So how would that alter the balance and the scenario?
What it really means is, as multinationals seek to move into these other markets, they're rapidly growing markets, but they will be encountering new competitors who are already there. They may not have heard of these companies before, but they'll find them to be fierce and aggressive competitors. So multinationals that are seeking to move into these new markets will have to have very clear value propositions, products, delivery systems that meet the needs of those segments, often at lower cost. But we certainly see a lot of opportunity there, in medical equipment, for example, in consumer products, in automotive, a wide range of businesses. There is an opportunity to go in there and compete on the same turf as the Chinese. At the same time, the Chinese competitors are very present in the major cities, and they're getting increasingly sophisticated too. So it's not as though the tier 1 cities are a haven of lower competition for foreign companies.
But foreign companies have generally found China to be a tough market to crack. Are they taking this sort of advice seriously?
Some have found it a tough market to crack. I guess in a sense many have found it tough, but some have gone on to succeed and others have not. What determines that in our experience is the ability to take on board these issues of understanding the differences, the local context, the differences, alignment with some of the government development objectives for the country, and the distinct needs of the customers there. So yes, there are many major multinationals in China that are looking to move much more broadly. Most of the global packaged goods companies, for example, the major industrial companies, are very aware of the opportunity and seeking to push into these areas. But it will require a different approach, even to the approach that has been taken in cities such as Beijing and Shanghai.
And generally, multinationals that you're talking to are responsive?
Very responsive. They raise some questions these days about the openness of China to foreign investment, and certainly there have been various statements by European and American business leaders in this area.
General Electric was
for example, and the European Chamber of Commerce recently made a similar statement. I would see that really as part of the ongoing evolution of conditions in China. China has always pursued a very clear strategy of building its own economy and building the capabilities of its companies, and that's now surfacing in different areas. But there are still major opportunities, and we see companies very keen to continue to grasp those opportunities.
Why do you think Jeff Immelt made those comments recently? Because he really made a pretty forceful statement.
So I imagine there's a range of issues he's touching on around China's openness, around the business environment in the US, which reflect some of these questions still around the indigenous innovation policy and what form that will actually take. I think similarly there's now been a set of quite responsive statements by the Chinese around taking into account the needs of global business. So it will be an ongoing discussion to make sure that China remains an attractive place for foreign business, which I believe is important to the Chinese, and that the Chinese see themselves developing successful enterprises and meeting the needs of their customers, their consumers and population.
Andrew Cainey, Managing Director of Booz & Company in Greater China, thanks for joining us.
Thank you.